What's up, guys? Welcome back to the channel. If you haven't heard by now, Dr. Michael Burry from The Big Short had already shorted Apple stocks in March 2022. And at this point, I don't know what about you, but I want a piece of this action. And I believe I can do it too technical. I'm not going to talk about the fundamental because I believe Dr. Burry probably did a thorough part on that. But at this point, I believe I know how to. I know how to get in. Possible a way to do this. When to get in and how to do it. But if you know a better way, please put it in the comment section for me. But at this point, I believe Apple has a lot of room to go down here if we do go into a recession. Okay, so and also Apple just broke down from one of the strong support level. I'm going to show you. So this is a daily chart of Apple. Okay, and you could see here, this is the peak of Apple. Okay, this is the top of Apple. Apple tried to put in a high, but they can't. So a high low, and then they try to do a high here. They did put on high, but not a new high. So basically, this is like nearly like a triple top here. All right, and this fell, and then they just break down. And this week right here, right, it broke down like 4% for no reason at all. All right, and then it went bounce off here. So at this point, I don't know where Dr. Michael Burry short Apple. He got in somewhere around March, maybe somewhere around here. I don't know, and he does it through option. Okay, so but look at the bigger picture, right? Right now, Apple basically just broke down from this semi long term trend line. So it just broke down here. So which is very important. Most likely it won't gonna go back to up here for a while. So right now I believe the top for Apple is in. Okay, and at this point when they broke down of this uptrend line here, it's also broke down of this side of this support also. So they have broke down this uptrend line support and also broke the sideways support. All right. So basically right now, if anything, right, Apple could move back up to here or up to here. Okay. So, that is where most likely we're gonna short Apple. It's right here. If you want to go and you don't have a lot of patience, or you divide your part into multiple slot, you could start one here, and then if Apple does go all the way up here, you could short it again. Also, Apple is in the down channel too. Okay, so look at this channel. So these are all resistant, and the red line here is the 200-day moving average. Okay, and this one, the blue line is the 50 days, and the yellow line is the 100-day. So there is a lot of resistance for Apple to move back up, and at this point right now, I don't see any catalyst for Apple to move up at this point. And then we also have earning come out on I believe July. Okay, and the thing is, last earning they did actually pretty good. However, they did say due to the supply chain, it took like $8 billion. I'm not sure. Don't quote me on that. Okay, $8 billion of of deduction or something. So there's going to be a problem with this coming earnings season. So that is possible catalyst to go to the downside also. Okay, so just multiple thing, and then also the Fed. The Fed is possibly going to increase interest rate too. Okay, so we have one in June, and another one in July. So those are the Fed meeting. So those are possibly, could also affect the tech stock, right? At this point right now, most of the tech stock, the small cap one has already been oversold. They haven't come for the big tech stock yet. So in the recession, if we do come into or near to, they usually start to hit the big cap tech. Okay, so that's what I see. That's why, and this is the weekly chart, and you could see here more clearly, right? This semi long-term uptrend that has really broken down. Okay, so this is a top at this point, and then right here it broke down under this level, sideways level. All right, so right now at this point, right, if you get to look at that, you would like, and then also on this high right here, the volume isn't that high at all compared to these volumes. You see that very timid. Okay, and then also right here, when they try to make a high at this point, look at the volume is low, and then the selling volume when it's come down here, somewhat significant, not high, but somewhat, just starting. So basically, usually when you see that, is a possible starting point when you see a lot of volume breaking down. That means the short has committed to the part, and plus it's broke this level, okay, this sideways level. So that's one thing. Let's take a look at the monthly chart. I don't know if there's clean or not. Yeah, see, look at this, right? It's coming since 2009. Okay, it's in this channel, right? Big channel, and then you have some right here. So right now it's in at this support right now, but I believe it will break. It has further to go at this point, and this is a 2000. It hasn't gone back to the 2000, before COVID hit. This is where the COVID level, the 2020 here. Okay, so it's went all the way up at this point right now. To take in other catalysts is that right now we have high inflation. Okay, consumer spending is decreasing. Okay, disposable income is all-time low. Household saving is pretty low right now too. So all of this, right, and this Apple is discretionary spending at this point. So I mean, if we do go into recession, there is a lot of headwind for Apple right now. So I'm not hating Apple. I love Apple stock. I don't like their phone like that, but but they do very well at marketing. The company wise, that's the thing. So at this point right now, that's what I see. Okay, so there is a chance for you to short the stock at this point, because right now, right, if target wise, we're going to ask the target, where would we target if Apple does come down, right? So at this point we have support right here, right? And then we also have some minor support right here, and then we have this one thing right here. I didn't realize it. There is a gap right here. So most likely this gap will have to be filled. Yeah, I didn't realize that either. I drew this for my other analysts, but there is a gap here. So most likely when there is a gap, they're mostly going to fill that. So $95, $96, at that gap. So most likely, I believe that would be the target. Okay, temporary target. Okay, but if you go to weekly right here, I think 190 right here. I believe if we do go into recession, Apple probably might go back down to like $80. Possible, but I wouldn't bet on that. Depend how you're going to structure your stuff, which I will show you how. Well, I don't know what I'm doing. Just so you know, this is not a financial advice. Please take it with a grain of salt. Okay, I don't know what I'm doing either. So you know. Okay, so at this point right now, right? So our target is, I believe, right, to fill the gap. At least minimum is to fill the gap. That open gap right there, that is around $95. Okay, so that's my target, $95. Okay, so that's one thing. And then if we have a bad recession, or we could go into depression or whatever, $80 would be my other target. But for now, 95 would be an easy target to target. Okay, so at this point right now, how are you going to short this, right? You could do it with share. If you have money, you could do it with share, but the thing is, shorting with share is going to be tough, with fluctuation and all that thing. So that might be a problem. But if you have money, hey, good for you to do it. It's fine. You don't have to worry about that. So you could start a position if it move back up here, 150. If it move back up here, you could start a position at that point. And then if it move all the way back up to 160, which where all this resistance here, that I would definitely short into that. If it does move back up there, that is the spot I would want to short. But if you don't think Apple could move up right there, and if Apple does, we do have a bullish week this week, possibly 150, you could start a position and then wait another position, if you want to do that. So that's one option if you're going to do share. Okay, so that's my opinion. Okay, so please, that is not a financial advice. Or if Apple couldn't go up at all, which I believe they will pull up right now at this point, because this setup right here is very bullish. That I believe this is doji, with a big wick right here, so it's bullish. Probably gonna move up. Okay, so at this point, that's one thing. But for me right now, if I'm gonna short Apple, I don't have the money to short Apple like that. 100 share of Apple is $14,000, right? 145, yeah, 100, yeah. So 14,000. I'm not gonna waste money on that. I don't have the money for that. Okay. So if anything, I would do put option. Okay. At this point right now, let's take a look at the put option. Okay. This is for the date of July 15. Okay. July 15. If you do like $100 target. Okay. Let's move down more. Let's say 95. Right. Let's do 90. There's some open interest here on July, but July I think is too soon. I mean, that's next earning. I wouldn't expect Apple to fall down to 100 at that time, because right now Apple is 145, right? So I would, if anything, right, I would at least go up to October, okay? And if you want to do 100, right, target price at 100, it would cost you right now, if you at this level, it would cost you around $175 per contract, which is equivalent to 100 share. Okay, so if you want to do that, that is an option right now, October. Okay, but to be honest, I don't think Apple gonna fall into that. It's possible if there are other catalysts, if there are some other problem with the economy, is a possibility. Okay, that Apple could go down to that level. It's a possibility. I wouldn't rule that out. Okay, so if you want to do that, you could spend around $175 straight of that. For me personally, I looked through this option and I was somewhat dumbfounded to see right now the open interest for this thing is not that high at 100. That's November. This is December. December nobody shorted, but when I looked through this in January, look at the open interest for the 100 straight. 48,000 open interest right now. I mean, look at all these open interests here. Huge open interest. So somebody is actually shorting this stock already, set it up for next year to go down to around 100, 105. And look at that. Up to like 85 to 9,000. So a lot of people. And if you want to do straight out of this on January, it's going to cost you around $3. $295 per contract, which is equivalent to 100 share of Apple. I haven't looked through. Let's look at March. I haven't looked at this yet. Okay, March does have somewhat of decent amount of open interest. Okay, June too, but anything right now, based on this option, open interest right now, January is the thing, and I believe January is possible a date. But the thing is, I wouldn't buy 100. I wouldn't buy straight out. I mean, if you want, you could do it. That's going to cost you $300 per contract. Okay, to short this. Okay, but me, I would go up here, and I would do a calendar port. Calendar port a little bit complicated if you don't understand. Okay, so you basically sold one port. So basically, I'm gonna sell the October port, okay, that's gonna give me around $1.81, okay, and then I'm gonna buy the January port, okay, at 100, okay, and that would be $300, right? But since you sell this port here for $181, it only costs you $115. So even if the price fluctuate around here, you could still make money, as long as it doesn't make new high, which I don't think it will at this point, because it's kind of put in the top already. This part right here kind of confirmed the top. So I think as long as it's trending down, trending down slowly, it when you sold this option here, the October option, that's going to give you money once it's go down slowly, and then that's going to increase on your port here. And I mean, this might sound complicated, you guys, but look up on calendar port, okay? And then if you're afraid, then there is another option, okay? So basically, if you want to do, it's going to cost you $1.15 if you do a calendar port, instead of straight out $3 for 100 strike right here, okay? So you practically save a good amount of money to just do this, right? You back only pay around maybe 35% of the price if you set up this way, and then this going to help with a lot of volatility because it's not going to go straight down. I don't believe it will just go straight down. Possible, there's a chance, but it's going to fluctuate, and that's going to help a lot. And there's another option. You would like, what if it go below, right? I could do a diagonal put. Okay, instead of selling 100 straight, the same strike, I sell a 95 straight. So if it does go down below the 100, up to 95, I would make $500, if anything, before the contract over. So if I do this, it's gonna cost me a little bit more, right? Because if I sell a 95 put on October, it's only $140 instead of the 100 put, right? If I sell 100 put, I would get $181 instead. All right, look at that. All right, and 140. See that? So if I do that, it will cost me overall price for $155. So compared to 115, you have to pay $40 more. But this way, if anything, if it does flush down, you do have room. You do make money on this pace, and then on top of that, you can roll out this thing also. So that's another thing. It's get very complicated when you play with these stuff. But I mean, to save you money, and it's great if you know how to do the strategy. Okay, so basically at this point, just to wrap this up, if you want to just short the stock straight using buying the share, $100, 150 is a spot I could start. You should divide into a couple position, maybe 2 or 3 position. When it go up to 155, I will short there. Okay, 1 position. And then if it does go up to 160, I could short there. Or if it go up to 155, I start another position. And then if it does 160, I'll start another position. That's what I would do if I do the share. But at this point, if I don't want to, I could do I could buy the port. I could do, instead of buy, I could divide it into like couple port, just you could start right away, right here. Just start out 1 port and then buy another port up when it go up here, and buy another port when it go up here, And then if you don't, you want to save more money, you could do the strategy, the diagonal port, or the is it calendar port, yeah. All right, so basically that's it, guys. Thank you for watching. I think it's get confusing when I get to the strategy, but at least if you want to short, you know where to short the Apple stock at. Okay. All right, guys. Thank you very much. Good luck, and bye.